and welcome everybody to this week's episode of the Co-Living Coach Show. This is Christine, and every week I get to bring on co-living operators, investors, real estate professionals, developers, anybody that has to do with co-living. And this week we are bringing on an investor. I know it's been a while, and this one is great because they're based out of Singapore, but they actually invest globally. So let me read their bio. This was such an amazing interview with Peter Young. I was waiting months to bring him on. I know he's a busy guy, and we finally got some time with him this week. So I will read their bio and enjoy the show. Q Investment Partners is a Singapore-based private equity real estate firm with deep expertise in the capital and real estate markets. QIP has first mover advantage in the co-living real estate sector, delivering to Asian investors the first private equity real estate co-living investment opportunity. As the co-founder and CEO and an active real estate investor himself, Peter is passionate about investing in institutional-grade real estate and creating scalable real estate businesses. QIP partners with like-minded professional investors who seek overseas alternative real estate. They bring deep understanding and local expertise in the real estate country markets to build, develop, and operate real estate purpose buildings. They actively invest in the US, UK, Germany, and Australia. And these investments are currently focused on purpose-built student accommodation, co-living rental buildings, and retirement living. Building on their strong relationships across the debt and equity markets, QIP partners with institutional, family office, and high net worth individual investors in Asia, active in Singapore, Hong Kong, and more recently in South Korea. Together with the co-founder and senior management, they have an investment track record of more than 300 million US, delivering net returns between 13 IRR to 21 IRR across UK, US, and Australia in the student housing, multifamily, and co-living sectors. Peter and his team are passionate about bridging Asian capital to access, invest, and operate overseas alternative real estate investments. Again, you guys, especially the operators right now that are raising, this was such a great interview for some more insight on investing in co-living and obtaining capital. So enjoy this week's episode and feel free to reach out directly to Peter and his team at Q Investment Partners. Hello, everybody. It's Christine here again with this week's episode of the Co-Living Coach Show and podcast. We are on SoundCloud, Spotify, YouTube, and iTunes. So you guys can listen or watch when you're commuting or working out or on your lunch break. Today, really excited to have Peter Young on the show. He is actually the co-founder and CEO of Q Investment Partners out of Singapore. And you guys know we don't just have operators on. We love to bring on the real estate developers and investors and educators in this space just to kind of get different perspectives. And of course, I know the operators listening will love, this interview and finding out more. They do private equity. They mainly invest in ground up development. So we're going to dive deep into it. And the thing I'm most excited about with Peter on the show is that I know his true passion for co-living, and he sees this as the way of future living. So let's dive right in. Peter, first, thank you so much for coming on today.
Thank you for having me, Christine.
So let's start there. Let's hear, you started Q Investment Partners, 3 years ago?
Yeah, that's correct. So Q Investment Partners, I co-founded in 2016. So we're a reasonably young firm, but a team of us came together in 2016 on the back of our own strong professional backgrounds in residential real estate. So the wider residential living from, cradle to grave, as it were. Covering the student accommodation housing space, the multifamily sector, and of course, very much now in the co-living sector. So we've been 3 years on. Very excited about what co-living has to offer and how that fits in within our investment thinking and investment strategy.
So it's a perfect segue into my next question. Like, personally for you, what excites you the most about the co-living industry?
I think co-living is really very exciting from the perspective, and as an investor, and that's what we are at QIP first and foremost, to look for exciting real estate investment opportunities that typically drive an attractive income yield return. We like to look for revenue and rents that have progressive growth on an annual year-to-year basis, and the forecast for that. And of course, build really interesting buildings that are rent-based that potentially have capital appreciation value through the rent growth and the building and the community that it provides. So that's really the starting point of how we look at investments. We have had a very interesting journey over the last 10 years as a team, investing in the student accommodation housing space, which we see very similar factors in co-living. So of course, from as early as around 2017, we really started looking deep into the sector and have now made our first investment in that sector, and really open to looking at opportunities in this exciting sector, co-living.
And then which markets? Is it the UK and the US? Which ones are you guys currently involved in?
Yeah, so as a business, we tend to focus on investing in developed markets. They cover the UK and the US, where we have active investments now, but also to look at Germany and Australia. So really 4 country markets that help us look at investing in developed markets we're comfortable with, country markets we have expertise and teams and partnerships on the ground. So within co-living specifically, our first project is in Chicago, but the thematic approach is very much urban cities with very expensive rents and affordability issues. So that's the focus of where we're looking at.
And the name of the development, which we had the founder on our show earlier, is, are you able to say who it is?
Yeah, absolutely. So Reza Merchant, of course, through the collective, is really one of the significant players in the sector. Through business relationships in the UK and UK real estate, we have done our first project in Chicago, which we're sort of moving ahead with the program in an exciting way. And that's our first project that we're doing together, and hopefully we'll look at other things in similar markets in the US.
Terrific. And then, so again, you being involved in real estate investing in general, what are some really cool differences that you're noticing when you're moving into, when you do the student accommodations and then co-living? Like, what are some common themes you're seeing?
Yeah, I suppose maybe starting at a broad level. So from a sector point of view, we, as a business and as a team, we've really seen through the journey of what purpose-built residential buildings can do from a value point of view and the product creation point of view. So not too many years ago, if you threw the investment idea of putting 300, 400, 500 students together in a single building, that would be seen to be particularly absurd. And of course, the obvious thoughts of having 300, 400 18 to 21-year-olds in a single building, that idea of that being an institutional grade asset class was something that a lot of people put some doubt on. But ultimately, when you look at basic fundamentals of supply and demand, a lack of good quality product, challenges in affordability for that particular use class, and creating a product that is a tailored use. And I think increasingly we're seeing in real estate, you have to be creating products and real estate products that are tailored for a particular use, a particular group, and then that's what we saw and what we did, and how we evolved with our investors in creating purpose-built student accommodation. We established very attractive yield returns and significant development profit by creating great products that service the student housing cities in the UK. And similarly, turning to co-living, we see the same sort of traction going through. It's, of course, very much still working through the definition of what is co-living, and that definition, there isn't one, because every country market, every city, every building is entirely different, and you can work from a sort of blank canvas board, as it were, to create what is that suitable product. And ultimately that is affordable rents, convenience, and a product that people like. And that's where the similar sort of investment framework we see going through co-living.
So if you had, you're right, it is a little bit difficult to define, and everybody has a different definition. But if you had to define co-living in like one or two sentences, what would you say co-living is?
I think from an investment standpoint, I would say it's looking to find the next best of use value for the real estate that you find. So again, that's being very sort of investment focused. But ultimately, if we see a piece of land where we're seeing that we can put an attractive product, an attractive building that is for rent, giving our users the right product that provides a community, activating better use of space, that translates naturally to finding its way to creating more value for the same piece of real estate that has other alternative uses. So in short, it's co-living from an investment standpoint has value by finding the next best of use for that piece of real estate.
That is, Peter, that is a great definition. I love that. And I'm actually envisioning, like, if you found this amazing piece of land by public transportation and cool restaurants, and, you know, that could be an amazing location for co-living, right? So I think you're right. It's the best use case for that piece of land or that property. So that's perfect, especially in a city like Chicago or New York, right? So let's see. The next question I have for you is, so touching on the asset class categories, like for student accommodations, and I've asked a few people this question. When do you think that co-living itself will be its own asset class? And I know every bank around the world is different, but do you see that happening anytime soon?
Yes, I think in the medium term, that will naturally take place. I think and co-living, of course, has application globally. I mean, for us, we're looking at the developed markets in those 4 countries I mentioned, and amongst sort of Chicago, New York, even closer to where we are, Hong Kong, Singapore, a strong level of application. As to sort of where we are in the journey for co-living, I think we're certainly getting there in terms of the capital markets understanding the reference to other real estate products that relate to co-living. So on the sort of banking side of things, that's certainly becoming much more amenable. Ultimately, when we look at building a piece of real estate, that takes a combination of equity investors and banks being involved as well. And the banks are certainly looking at that as being an institutional grade asset class that can be funded. It has reference points. And again, depending on the product, it has reference points to what a student accommodation product metrics are, what a traditional multifamily metric may be, as well as service apartments and hotels. So the banks are certainly coming on board. There's certainly an education aspect of educating private equity investors and more opportunistic investors. And naturally, as we saw with student housing, that will move to institutional investors seeing the opportunity, perhaps coming in at the more sort of operational, stabilized phase of the product. And I think certainly over the next 2, 3, 5 years, we will start to see some of the institutional grade products come through, being fully stabilized. Our partners have, of course, got a number of projects in the UK that is going through that, has gone through that. So I think everyone's experience in that will naturally lead to it being an investable institutional asset class.
And then does Q Investment Partners, do you guys come in and just hold short-term, long-term? Are you guys figuring that part out?
Yeah, so we're really looking at both key phases, which I think the journey we're going through at the moment is really sort of rolling up our sleeves, understanding the market, and creating the product. With our first project in Chicago, that's what we've done. We've looked at a fantastic location in Chicago, which is obviously a fantastic metropolitan city. Building that ground up, allowing us to really create the right product, the right communal space, and the right experience. And then, of course, challenging the market in terms of providing good accommodation, which is cheaper than what others can find living and working in Chicago. And from then on, naturally, the sort of stabilization phase will happen. And for us as an investor, we're open to either just looking at the product creation as well as holding it for the medium to long term, because the rents and the rent growth of co-living, looking at others that have gone through that, it will naturally be very, very attractive for us to hold for the medium term.
And then are most investors into the fund, are they based in Asia? Are they based around the world?
A large part of our investors are based in Asia. So that's part of our business model. We have a large part of our investment management team and capital management team based in Singapore and the wider Asia capital channels in Korea and in Hong Kong. But of course, our investment focus is in the developed markets. So in certain segments that we know very, very well, part of our journey is to have teams on the ground to execute our real estate strategies. And in new sectors like co-living, we look for best-in-class developers and operators to work with. So yeah, that's our approach, Christine.
Perfect. And then do you guys invest in other sectors of real estate other than co-living?
We do. So our key focus is in the residential living sector. So we are very focused with scaling up our student housing theme. We have a lot of track record in that space. We are moving into co-living. Really see that as a similar journey that we've done. We do our first asset, do it well, take a lot of the learnings that we've done in that space. Of course, look at the different other opportunities and add to our portfolio and through progressive learnings and the sector developing. The great thing about coming into co-living now, like what we've seen in student housing, the opportunities are greater. I think with co-living, similar to student housing, what we find is we're able to select from the best cities, the best locations in that city, because the opportunity in co-living is, as I mentioned, to create that next best of use for that piece of real estate. And when we invested in student housing, we found the best locations in cities all around the UK, in Edinburgh, in Nottingham, London, and we found the best locations, and the financial investment and the underwriting simply worked because you were providing and creating a purpose-built product that had better value than the next thing that could be created in that same plot of land. So co-living is exciting and going through that journey.
Nice. And then, so this is a question I like to ask every single person that comes on. Peter, where do you see co-living in the next, if we fast forward 10 years, where do you see it?
I think you'll start to see a lot of the institutional investors clearly moving into that space. The world isn't going to be changing too much in the next 5, 10, 15, 20 years, you would imagine, in terms of institutional investors seeking to invest in real estate, stabilized real estate, providing attractive yield and rental growth above inflation. And that's what the opportunity is in co-living. So naturally, over the next 5 to 10 years, I think you will start to see great products being created from fantastic developers and operators that we know already now, through to new developers and operators creating different products for different markets, the high end, the the middle end and across different ranges. And as we start to see that happening, and as we start seeing that buildings can be fully rented because you're providing more affordable accommodation, a more fun space, a more sticky tenant base with good rent growth, then naturally what will happen is products will be created, more products will be created. They will be well funded by banks. Everyone will know what you can get and readily available, and equally the institutional space. They're observing it very closely already.
Yes, yes, they are.
The obvious big names. If 20 buildings was available at attractive rents, they would be bought up because everybody understands that in great city locations, providing great income, that works. But that will take a little bit of time, and through education and through successful products going through the process, 10 years is a significant time frame, I think, for this to clearly be an investable asset class.
Great. And then a quick question, because again, I have so many friends in investment banking and finance. What is your, and again, I'm sure the answer is different with different people. What do you find is considered a quote attractive yield? What percentage?
I think again, it depends on the asset class. I think using those the two sectors we're very familiar with. I think when we started looking at student housing, I think 7-8% yield returns in attractive tier 1 student housing markets 10 years ago was very attractive and imminently available. In what we're looking at today, tier 1 cities are nearing 5.5, and 6 would be a very attractive yield entry price. And then that simply reflects traction, liquidity, the level of institutional capital in that space. And if you look at co-living, I think you can find very, very attractive yields, particularly if you are looking at purpose-built ground-up development. The benefit of, and again, different models of co-living in different markets, in different regulatory environments have certain constraints and opportunity, I suppose. But in a ground-up purpose-built approach, I think that creates an element of benefit of being able to maximize space and drive that rental yield a bit higher, because ultimately you're putting in more people in buildings in a way that is tasteful and fun.
Perfect. Yes, very well said. A perfect place to end this interview. Thank you so much, Peter. Again, it's so nice to bring on people that have this investment banking background that can talk about it from that perspective. Because I know all the operators that are looking to raise funds, looking to build from ground up, this is the stuff that they need to know and they're curious about. So again, thank you so much. We'll have the firm's contact information. If people want to reach out, they can, and we will be watching you guys in the future, and can't wait to talk to you in 10 years and we can look back on this and see if our predictions were right.
Brilliant. Thank you, Christine.
Thanks, Peter. Bye-bye. Thank you so much for checking out today's episode. If you want to learn more about co-living, you could check out my book on Amazon, The Co-Living Code. And of course, if you're looking for the perfect software to power your co-living concept, check out kindred.io, KNDRD.io. Thanks. And a quick thank you to SPX Agency for all of the graphics, animation, and design on our YouTube channel.